Welcome back. Uh, if you have seen last week's discussion on markets Kya Lagta hai, you would have been very happy, just the way I am. And thanks to the markets, they have been honoring me with my readings coming out really accurate enough to be able to make the right guess and help us all make decent enough money. So today we are not only going to be talking about Nifty because I don't have a lot to talk about Nifty. We'll quickly review Bank Nifty as well, and there's nothing much today, just that we are seeing the same follow through that's happening. So let me quickly open the charts, and these are the Nifty charts on a daily time frame. And we were somewhere here, and we said that we believe that now markets have turned around, and actually there was a very nice entry point here, 50% of the correction for the first fall to got in the market. And then there was yet another very nice entry point when you had high of yesterday to take another shot. Now we have hit our first target, which was around 18,150 levels, and we are now waiting for our next target to get hit, 17,800 810 815 levels. And as I mentioned also last time, this view gets nullified if we start going above 18,915 or so levels. Okay, so we do believe that Nifty has got a lot much correction to go through, and we believe that after this, the next stop looks to be somewhere close to 17,050 levels, which is a correction of the intermediate wave. So this wave needs to correct, and if we are right, and it's not just this wave but even higher wave than this which is correcting, then we would be looking at a correction that would take us somewhere here. This is 50% correction, but at least uh, 30 at least a 38% correction is very likely. So I would actually add one more level there to watch out for. So that is also a level that we are going to be watching out for, 14,700. But as I mentioned to you, after this correction, I am expecting a very fierce, very sharp rally. So now as Nifty starts correcting, we will need to start looking at investment opportunities, which we will start doing in couple of weeks from now, when Nifty corrects to a decent enough level, and then we can actually start deploying our capital slowly, steadily. This is for the investors, the people who want to be investing for long term. Could also be for traders, why not? So but I don't have much to talk about in Nifty more than this. But if you still want to see the detail out picture of Nifty, this looks to be a first impulse, and this is a correction, and then we have had the second correction. So there is a possibility that we are doing a 1 2 3 4 5. There is a possibility that we are doing a complex correction. Complex correction could be anything. It could be ABC X ABC, it could be sideways, it could be there are a lot of different varieties of correction. So I'm not going to be at yet going to be able to tell you that this is what is going to happen. And corrective waves are like this, they are very difficult to predict. And what helps is Fibonacci, and there is a second thing that helps, and this is something that I used today. Actually, I will quickly show you um, shorter time frame. And once you have when you really have, if you would count here, then you would clearly see that there is a 1, there is a 2, there is a 3, there is a 4, and then there is a fifth wave which you are expecting. And when you are expecting a fifth wave, and when you have got Fibonacci's and other things lined up, so for example, if you go to this Fibonacci, if you really look at it, this was very much close to a 50% correction, little more than 50% correction. You have got those triggers that will get triggered, and then based on that you go short. Now you want to decide how long you want to be holding with this short, or let's say you want to decide how long you want to be holding with this short, and market is in a very nice downward move. There is a very nice tool which comes handy, regression trend channel. You just go to the topmost bar and then drag it down. At least you need to have one low going up and then second low. So if you, even if you are somewhere here, and if you plot this chart, you would know when you want to exit this particular market, and it will tell you that markets are still going down and they might keep on going down. Similarly, if you would have done it here, I believe this is where the major fall started, and I only want to capture the aggressive fall, so I would just follow this aggressive fall, close above this, and then markets moving up, I would exit. So I'm only in the very good aggressive move in here. It works, and it works really well, especially for exits. This may not be used for entries. So for example, here the exit happened, but if you would have taken long entry here, it would have actually, market would have come back again. So be careful with that. Now let's quickly go to Bank Nifty. And Bank Nifty, we have already talked about all the waves, and we believed that Bank Nifty may not give a major rally as we expected for the Nifty, and we said that it probably has finished one wave, which seems to be this wave, and then you have got a red wave 1 2 3 4 5. I'm going to zoom in and talk about it, and beyond that we are going to be finishing one such wave here at a very high level, and from that time onwards you are going to be seeing a very long sideways correction that is going to be starting here. If you have missed it, I have already done it in one of my old videos. I will give link to the that video here. I'm not getting into the details. I just want to declare that out of this we have already finished this particular long move. So on the red line, if you look at it, and if I could select that red and talk about it, it's a primary wave. On the primary wave, we have completed a 1, a 2, and also a 3, and now we are into a fourth wave, after which we are going to be getting into a 1 2 3 4 5, which would probably be also end of this 5, which that's why I have not put it in here, otherwise it becomes too many lines, which is also going to be end of this wave 3, which will then get into a painful very long correction. So here we are going to be seeing a short time correction, which will again take us up higher. So after the correction is over, we will do the estimation of higher. And please do not look at the timeline, because when I draw these, I do not consider the timeline. I only consider the vertical price. So let's zoom in a little bit, and let's go to the daily time frame. So you had this red line, which is primary. You have got a 1, you have got a 2, and now this 3 is over. This 3 was made up of this 1 2 3 4 5, and then 1 2 3 4 and 5 black, and this 3 was made up of blue 1 2 3 4 5, and this is again made up of 1 2 3 4 5, and then we have actually done all the detailed calculation last time in the Bank Nifty video. The good thing that we are able to see in Nifty, in Bank Nifty, which we do not see in Nifty, is that this is going to be a sharper correction, and then you will have a sideways correction. So Bank Nifty seems to be a little more weak compared to Nifty. That is how I expect it to come along, and I expect this to at least fall to 39,570 odd level, 39,600. You take it, or up to 38,200 levels. Again, as the picture comes out, we will be able to know better and better, and this gets nullified if it crosses above the recent high, which is going to be around 45,000, 44,300 or so. That is how you would do it. And then when Nifty, this is a little different correction than what we are seeing in Nifty. On Bank Nifty, there is still one up move pending. So when Bank Nifty starts coming lower, you can start evaluating selling both call and put, and then try to make money out of that. I'm still not comfortable giving you specific trades, although there was a very nice trade that came out today afternoon. There was a very nice trade that came out couple of days back, but those were mostly positional, and they lost a lot. For example, the 18,600, I don't know whether I'm able to get that here. Let me just check that. Okay, so there is this 18,600 CE, and it had given very nice up move all the way here. Let me just get the cursor out here. So very nice move 102, and then it also gave very nice up move 82. So it actually gave very nice from 82 to 10, and at that point in time IV also shot up, and then this is mostly due to the IV breakdown. uh, uh, got very nice opportunities during the intraday, but at the end of the day there are very poor scope, so I would just skip that talking about it. And maybe we'll wait for next week to be able to start getting the weekly calls. This week I did lots of combinations. I'm not getting anything better than 1.5 to 2%, which is not worthwhile your risks. So let's wait for the next week, and maybe in next 2 3 weeks we will start looking at how do we analyze the stocks from the long term perspective. So if you want me to analyze some specific stocks, please do let me know, and I will try to do my best. Okay, so with that, thanks a lot very much. But there was one very important thing that I missed out early in my session, which I always do: risk disclosure. So please make sure that you understand your risks in the market. Whatever I have told so far is my opinion, and you do not trade based on my opinion. Trade based on your decisions, because you are the only one responsible for your own money. Please evaluate it. It's mostly for learning. Learn so that you are able to earn. Okay, learning goes first before earning. Try to look at earning before learning. You will probably be losing out a lot. Okay, thanks a lot, and see you next week. Cheers, bye.